Welcome, everybody. This is Brighter with Herbert. So I've got a real treat for you today. Given that the Tesla Q2 earnings call happened this Wednesday, July 19th, I thought it might be a good idea if I brought together 8 of the most brilliant minds in the Tesla community to share with you their thoughts on the key highlights and the key takeaways. Each of these folks will share with you between 2 to 5 minutes of their thoughts. So we'll hear from folks like Warren Redlich. She's an Uber bull, ex-lawyer, has his own YouTube channel called Warren Redlich. Larry Goldberg is a serial entrepreneur and angel investor. You can find him at Tesla Larry. Lee has his own YouTube channel called TeslaEconomist. Scott Walter has co-founded 2 robotics companies in the past, and he'll talk about what he's heard about robots in the earnings call. Alex Voigt is our resident Tesla expert in Germany and Europe. Jeff Lutz is a regular in the show, as many of you know. He's a C-level supply chain expert from multiple Fortune 100 companies. Alexandra Merz is Tesla boomer mama, and she's an ex-fund manager. And finally, we'll have Bradford Ferguson, who's a founder of Halter Ferguson Financials. He's a financial advisor and has a division called Rebellionaire.com. So feel free to pick the person you'd like to listen to first. I'll put the timestamps in the description. Enjoy.
This is Warren Redlich. My biggest takeaways from the Q2 earnings report and earnings call. Number 1, various next generation vehicle locations. We don't know where they're going to build next generation vehicles, but it's pretty clear from what we're seeing now that they're going to build in Mexico, they're going to build in Texas, they're going to build in Berlin. We don't have any word about it yet, but they're probably going to build in Shanghai too, and maybe there'll be more. That is really important for the long-term growth of Tesla, to build a high volume of this next generation vehicle that's going to cost in the ballpark of $20,000, maybe less. Another big takeaway was the energy storage deployed and energy revenue. I was wrong. I predicted that the numbers would go up. They actually stayed flat. And they said in the report that storage deployed is volatile, and they said that solar deployed is slow industry-wide because of interest rates making it hard to justify the installation of solar at this time. When interest rates fall, we should expect to see solar rise, and we should expect to see energy storage grow. They've said that storage production is growing, but deployments are volatile because it depends on project timing. The other thing that I would describe as a wild card is the statement that Tesla is talking to at least one major OEM about licensing FSD. If Tesla licenses FSD to a broad array of manufacturers and they produce a high volume of vehicles, it dramatically increases Tesla's revenue with basically zero cost of goods sold. If a whole bunch of other manufacturers are going to sell FSD with their cars at, say, $15,000 a pop, and all Tesla has to do is supply the hardware and supply software they're already making, then Tesla makes a massive amount of revenue and profit from that with very little cost. And that could double, triple, or more what's already like a huge potential growth feature for Tesla. And then you add in, there was a reference to fleet services. James Stevenson mentioned it, and Elon replied to it. What happens with fleet services? I think that leads to robotaxi, that when Tesla's managing a robotaxi fleet, that can be incredible revenue and volume in the long term. So great long-term news. I did not have any short-term takeaways. I don't think the short-term is important. The long-term is fantastic. Tesla to the moon, baby.
Yesterday's quarterly report from Tesla was more interesting in what was not said than what was actually said. So let me first start by saying I was very pleased with the financial report. It didn't reach the very high level of expectation I had set, $1 a share, but that admittedly was a reach. But the results were above the analysts and certainly met the midpoint of Tesla community's expectations. It was, in the end, a very satisfactory quarter. But what Elon mentioned, almost in passing, was that they were very early in discussions with the leading OEM about licensing FSD. This, of course, was very exciting. But let's follow the breadcrumbs. And the trail begins with the opening of the charging network to other OEMs, leading, as Tesla says in the quarterly report on page 9, quote, leading to a faster growth of our charging network through a larger addressable fleet. Then, on page 10, even more exciting is the reference to, quote, fleet-based profits, unquote. What could fleet-based profits be? Well, we already have the reference to the larger addressable fleet of the charging network. But then we have this passing remark about licensing FSD. So this is where the trail is leading. The potential licensing of a Tesla vehicle operating system to OEMs. What do I mean by the vehicle license operating system? Well, if you think about the integration of the Tesla app with the Tesla vehicle, and you realize that it's giving you a window into the end-to-end operations of your vehicle, because the entire vehicle is connected to and controlled by a single computer system, and that Tesla has real-time visibility into every vehicle in the fleet and every system in every vehicle, then Tesla has the fleet operator's dream control system. And when I talk about fleet operator, I'm not just talking about fleet owners such as Hertz or Uber. No, I'm talking about OEMs now. If OEMs were able to license the Tesla vehicle operating system from Tesla for their new EVs, they would be able to eliminate a huge proportion of the components and software that today they have to acquire from a disparate group of vendors, and also eliminate their most acute headache, the need to write software to control their EVs. Think about Volkswagen's disastrous experience with trying to develop a software operation. If OEMs were able to license and brand Tesla's vehicle operating system, VOS, they would, for example, be able to adopt Tesla's 48-volt system and leverage Tesla's supply chain for that component and others. So the bread trail becomes very, very interesting. That's what I got out of yesterday. Am I dreaming?
I thought the earnings call was great. Sure, there was some news that sent the stock price back a little due to the factory shutdowns, but only temporary, and the reason for these is to upgrade the factory, meaning they'll be better as a result. And to speculate a little, perhaps this will be the new Model 3 Highland upgrade. The most positive elements of the call were the fact that Tesla are not only encouraging other OEMs to license their software, but are already in talks with a large OEM about using their software and hardware. We saw what happened when the likes of Ford and GM started using Tesla's charging and the effect it had on the stock price. If we hear a deal that Ford is going to start using Tesla's FSD, then the market will look very favourably to that, and then we'd likely hear other OEMs following suit. The other part that I was most excited to hear about was the progress with the 4680 cells, and how we might soon see an improvement in the energy density with what is being called the Cyber Cell. This also means that the CyberTruck will likely have more range than most people were thinking. The expected 10% energy density improvement from this new line is really impressive, given it is achieved without having to use silicon in the anode, which means there's likely another 10% or more improvement still to come when that's ready, making it the most energy-dense mass-produced cell for EVs. From there, it'll be all about ramping those cells and how that progresses, which will be one of the major things to watch next year. With a capacity of 100 gigawatt hours a year just from Texas, that alone should increase gross profits around $20 billion, which is obviously a massive jump in profits. All in all, it was a positive earnings call. Everything seems to be on track with the guidance as to where we expected. These are some amazing engineering feats that it sounds like we are getting really close to some coming to fruition. It's just, despite Tesla being an AI tech company, it's also very much a manufacturing company, and these things take time to achieve, but it is slowly coming together.
Hi everybody, it's Scott, and this is my take on yesterday's shareholder conference call and quarterly 2 update. And I think it kind of started out, the first thing I noticed is that Elon was quite ebullient, and in his opening remarks, mentioned optimist at least once. So that was good to hear. Of course, I was hoping that the questions that were on say, we would somehow be able to get to the optimist question. And sure enough, we did at one point. And I think part of the reason we got there is that a few of the questions they were able to answer pretty quickly. And then we finally get down to there and get an idea of how many bots there are and whether they're being used in the factory. And Elon seemed to want to take that question. He wasn't that interested in answering some of the other questions. You know, he did a few of them, but like, for instance, the battery cell. He decided he was just going to leave it to someone else to be able to answer that. But in this question, he actually dedicated 4 minutes of time, just to give you an idea, which is probably a little bit longer than some of the others. And the first thing is, it's not clear how many bots there are. You know, maybe I'm a little bit disappointed that we don't actually have, you know, a couple of dozen bots out there. He kind of, you know, said 5, maybe 10, because clearly we know there are 5. We've seen pictures of 5 walking around together, video of it, so we know there's there. And I suspect there's a few more, because when they took that video, there's probably a couple others that were around that were being used in some sort of testing. And so he might be saying 10 because maybe there's always tinkering and they're always in pieces like C-3PO, so he probably never sees actually 10 ever running at the same time. But they're there, and he says that, you know, there's more each month. So I don't know if that means we're adding 1 bot a month onto it. The time frame seemed to be maybe a little bit extended from what we expected. He certainly gave us an update on that. And of course, the first thing he did is he talked about the actuators and how difficult. So some of the information was information you already had, but he stressed it again on how important it was to have these Tesla designed actuators. And you may have noticed that Lars chipped in, and evidently it was Lars. I didn't know who it was at first, but according to the transcript, when Elon said that, you know, it's in order to build a humanoid robot, you need certain special actuators, and you cannot buy them on the open market, no matter how much money you have. So they need to be specifically designed for the application. And Lars chipped in, and he says, like, well, you know, at least you can't build a compelling humanoid robot with off-the-shelf actuators. So it kind of tells me that he was saying that, yeah, Optimus is pretty compelling because we have the right actuator designed for it. The other thing that was probably a bit interesting is that he talked about the first Tesla bot with the Tesla designed actuators being available sort of around in November. And I guess I was scratching my head because I assumed that the bot we've been seeing already is actually using the Tesla designed actuators. So what's going on there? Well, what I think it is that they probably are the actuators that are being built in-house, and they're testing them out, they're tweaking the designs, and eventually they're going to get them ready for manufacturability. So he talked about that a lot, making sure that it was very easy to manufacture these items. And so he said these will be the first production candidates. So if you kind of parse the whole question, I think what it means is it'll be the first bot actually made with actuators coming off of the production line, as opposed to just being built in the lab. And then after that, they'd be ready to ramp. So the number of bots between now and November may not be a whole lot, and then in November, they're suddenly going to start to ramp up pretty quickly. In which case, it's possible we could see 100 by the end of the year. Maybe a little bit above that, but if you know, we're really able to hit it in November, they should be able to do it. So the bottleneck really are the actuators. When I've done my calculations, the actuators are easily half the cost, if not more, depending upon what your guesstimates are for the cost of an individual actuator. That's because there's 40 of them in the bot. And so it can easily be half, 60, 70, 80% of the cost of the bot, depending upon how cheap they are, because they're the most important component in Optimus. So you got to get that right. And once they get that line spooled up, they'll be able to do it a lot quicker. So they may be intentionally holding the number of bots back just because it's probably so darn hard to build these things by hand that they're more or less waiting for that, and they have probably enough for them to do what they want. And then, of course, he did tell us that early next year they expect to be doing useful work. So I think there's already doing some work, experimental work, on the factory floor. But useful work, it's more likely going to be, you know, sometime next year. And I think by useful work, meaning actually doing a shift and then having product coming off the end of the line that you could say really was Optimus built. So yeah, that's about all I have on that, and hope that's an update. I'm sure there's a lot more of things going, and talk to everyone later. Bye.
My reaction on the Tesla earnings call this week is that this is the best call, the best results we've ever heard, for 3 reasons. Number one, the auto business is growing 50%. We've heard record deliveries, record revenue, and in terms of margin, Tesla is 6% ahead of the average industry. So this is just fantastic results in a time where you have a lot of headwind and a lot of challenges, high inflation still there, interest rates really high, you name it. And the future in terms of CyberTruck, in terms of Berlin and Austin ramping up is fantastic. So auto business is going exceptionally well. The Model Y has just been declared as the best-selling model vehicle in all of Europe for the year 2023. So that shows the position of Tesla. It's just fantastic. Number two is Tesla Energy. Tesla proved with an around 18% margin for the stationary battery business that business unit is now as profitable as the auto business, which is way ahead of the auto industry. So this is our fantastic results because the growth opportunity in that segment is extremely big. And the 4680 cells of Tesla are doing well too, so they are ramping this up, which is adding this all together. There's a huge other second opportunity the market hasn't seen yet, which is a stationary battery, which is Tesla Energy. I've been trying to talk about it all the time. People just disregard this as a real business. It is. People should wake up and understand that. And number three, which is the most important one of the three, the big bombshell in the call was that there's a major OEM, probably or very likely a legacy automaker that is interested in licensing full self-driving, which adds licensing to the bottom line around more than 90% for sure. But even more important, this is a proof that the auto industry understands that Tesla is far ahead with full self-driving, with autonomous vehicles, and that one day the only chance for them really to survive and to keep their business going is to license software from Tesla. Everybody understanding how neural networks are trained, understanding how Dojo works. There's a crazy amount of compute added in the next 18 months, from 1 exaflop to 100 exaflop later next year. And, there is a huge amount of data, which is increasing like crazy. I mean, this is going up like a hockey stick, really. And Tesla can use this compute to train the data, to train the neural networks with the data, and will improve the system dramatically. And this is going to be the biggest asset allocation in the history of humankind. And I believe this is just incredibly bullish for everybody who understands this technology a little bit. And we have now the proof of claim from the auto industry that they believe Tesla is a front runner, therefore they want to license. And there's probably not only one automaker who is in discussion with Tesla, but a few. And this should all together convince everybody that this is an amazing buying opportunity if you have a dip. And, buy and hold is my strategy, and I believe this is the right way to go.
Yeah, no, I was listening in, and I thought it was, kind of interesting call in terms of there's bombshell things being revealed, and then then there's kind of some of the I would say the consistent dialogue that kind of we see on multiple calls and multiple other forms of communication. So I prefer to focus on the bombshells. Number one, just Tesla, the AI company, said you need three things. You need the talent, you need the data, and you need the computer resources. And they have all three things. The computer resources are need to ramp up, and as they ramp up, their AI capabilities will improve. Then it'll just be the faster ramp of FSD, to its production fruition. And then obviously the big announcement. There we go. The big announcement
I wasn't gonna let
is
you have the hat.
I actually have that hat. And now, Herbert, your turn.
Exactly.
The other announcement was regarding, obviously, with the FSD licensing. Obviously, this could be gigantic. This is a source of revenue that probably wasn't in a lot of analysts, multi-year DCF models, right? They probably didn't have a thing in there for Tesla licensing their full self-driving. In fact, many analysts don't even model a robo-taxi business. But this is licensing of FSD. This is, if you use our hardware, you take and our software, you take our network resources, you pay a license, and it's going to be fairly significant for, an OEM, because they basically get off the ground, with a solution pretty quickly, whereas Tesla's been working on this for years. So I thought that was big. The energy piece, I mean, the 200+% growth year on year, the gross margins sequentially improving, 70%. That's a big move up. This tells me as the energy business ramps, the margins are going to improve, and they'll definitely hit their 30% target, and they may overshoot because they're not fully scaled, and they're not getting all these services revenue. There's a bunch of stuff that's not even in this cake yet. And I think when people struggle with this, they want to kind of just put this in a box and say how many units shipped, in that quarter. But it's much more than that in terms of the deployment, the services, the AI that's involved, in terms of basically these things are shipping with AI computers that Tesla can control remotely and obviously improve the power consumption and performance of these systems. So energy big, the FSD licensing thing big. The earnings I think we're going to have to go through the 10Q to understand it, but the earnings quality seemed decent. But I think we're going to have to go through the 10Q to understand like what was driving some of the variance, some of the positive variance. And then it looks like, and I want to credit Open Skies, who was going through the earnings data and just looked at the free cash flow piece. And it looks like there's some significant multi-billion-dollar investments going. So I imagine that's for Dojo infrastructure resources, that's for CyberTruck ramp, that's for energy ramp, could be from Model 3 Highland ramp. So there's a lot of things that could weigh on free cash flow and weigh on operating margins today, because they're at low volume and you're installing capacity in the factory. So you're tying up free cash. You're also tying up gross margins, and you're definitely tying up operating margins. But in a couple of quarters from now, it could be explosive.
I so agree. So the one thing I wanted to add to that, I liked one. I think it was Zach's or Drew's comment on why are we not there yet on cost of goods sold, right? Because that is the number that was less spectacular than the others. So he said to not underestimate the impact that Austin and Berlin had on that, because obviously new companies and the new factories and their priorities shift in the first 2 years. So it first goes ramp. The first priority is ramp. No matter the cost, no matter what, you just have to get the factory up, then ramp. The second phase is quality, improve the quality, improve the quality, improve the quality until you're at a stable level of quality. And then third phase is bringing the costs down, right? So we just have to be patient, and that will replicate with Mexico coming or whatever. It's just a natural, a natural cycle of improving output at different levels in a new factory. And I mean, he explained it perfectly well. I really appreciated that. And on the free cash flow, so first of all, free cash flow improved considerably, and it was time it improved because Q1 was bad. We talked about that. But they said it was for AI efforts, it was for the 4680 ramp, and it was for the CyberTruck ramp. So those are the three cash burners at the moment, and they are all good cash burners, because that's what we want. We want those three to accelerate the same way that the factory ramps had to accelerate.
Hey, Brighter with Herbert. It's Bradford Ferguson from rebellionaire.com. My thoughts on Tesla earnings. I liked what I saw with energy. The revenue went down, but the margins went up, suggesting that Giga Nevada, the megapacks coming out of there, were greatly diminished. The Megapack 2XL from Lathrop is greatly enhanced, and that increased the gross profit and energy by about 110 million. all else equal. That's a big positive development. I'm here in the sauna before I'm going to take my cold plunge. The crazy thing for me last night was I missed the earnings call, and I saw some tweets about FSD transferability from car to car. I have a 2019 Model X that has FSD and it's got unlimited supercharging, so it's pretty painful for me to trade that car in, and Elon allowing for one-time transferability of FSD to a new Tesla is a really big deal for me. So what I did was I ordered a Tesla Model X Plaid. We do have a Model X already, and I'm going to transfer my FSD to that. There's nothing in the agreements yet or about it, but I'm guessing Tesla's going to be good for it. Other things that I liked seeing in the report, in the comments, was Tesla's continued control on cost. They're continuing to drive down cost. I think their margins went up in a way, even though they had some lower costs. So they held firm compared to where people thought they would be. I thought this was a big positive. This is going to be a huge story for Tesla moving forward. Just continued driving down of costs, and I don't think any other automaker can compete with that. Anyhow, take care and bye for now.